Good morning. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Mathew. And this show is all about answering all your stock-related questions. So you can write your queries to any of our social media channels or on the WhatsApp number that's flashing on your screen right now. You can also write to us on the YouTube live chat and we'll be tracking that and we'll take your questions from there. But before we jump into the questions, let's quickly take a check of the markets and where they're currently at. If you look at the benchmark indices, they're in a bit of a weak state. Started off on a bit of a positive note today, but as we speak, it's down about 0.8%. Now, there is, however, more pain in the broader end of the spectrum. If you look at the Nifty Mid-Cap Index, that's down about 1.3%, 1.5%. And Nifty Small Cap also down over 1% as we speak. Let's also look at some of the contributors in the Nifty 50 Index and see what's dragging the index down. Now, the biggest loser today on Nifty 50 is... if I'm not wrong, there's more pain in the PSE index, and among losers, we have the biggest loser as BPCL, which is down over 6% in trade. Now, there's Coal India that's down 5%, NTPC down 4%. Among some gainers, we have Bajaj Finance that's gaining over 2% in trade, UPL, ITC both above 1% as we speak. So that's where things currently stand. Let's also take a look at how the sectors are faring, and I think there's a lot more pain in the PSU space today. If you look at the PSU Bank Index, that's also down 2%. But the pain point today, Alex, is the oil and gas. Now, you look at the Nifty oil and gas, and that's down over 3% as we speak. Now, this comes on the back of...
the cuts in the petrol and diesel prices. And it's an interesting time because we're perhaps days away from the introduction of the days or the dates for the general elections to be announced. In fact, let's get our guests on that note. We've got Vinit Bolinjkar, who's the head of research at Ventura Securities, and Ayush Mehta, tech research analyst at Nirmal Bank. Thank you so much to the two of you for taking the time this morning. Vinit, I'll come to you straight away. We've been waiting for well over a year to see any movement in the prices at the pump for petrol and diesel. We're talking at a time when Brent crude is currently at, $84 to the barrel. It doesn't seem to be moving too much out of that band. So perhaps to a certain extent, one could argue that there was headroom for these oil marketing companies to change the prices, but that hasn't happened. Now that it has happened, what are the implications for these companies and investors?
So, in my opinion, this is just a short-term blip where we are seeing the markets sell off. But we believe that, over a period of time, the markets will gain back again. Primarily because, the constitution of their business is rapidly changing towards greener fuels. And we hope that, this will benefit the market, these stocks quite a bit. So right now, while the trend is down, and it is not specific to these stocks, it is the entire across the board selling that is happening, and they're not being spared either. But we believe that, going ahead, you should be buying these stocks on dips and wait for the market to bottom out. It has been our consistent view that around end of this month is when we will see the market kind of bottom out and start resuming the uptrend again. So to that extent, buying into these stocks at the end of this month is a very good time period to enter these stocks.
But Vinit, you're talking about both, which of the three are you talking about? I would assume you're talking about the three big ones, IOC, BPCL, HPCL. Which one would you pick?
My preferred pick is BPCL.
BPCL, okay, fair point. It is time, in fact, actually, you know what? Why don't we also take a check on the technical, since we're talking about the end of the month, we're at the midpoint right now. Ayush, if we're talking about BPCL and perhaps also a view on IOC and HPCL, what are the technical indicators to watch out for, and what price would be great to accumulate at?
So if we talk about the charts of all these OMCs, let's start with BPCL. So BPCL has given a breakdown of its 20-day moving average and it's currently trading below the Bolinjkar band's lower band. And so the support point here is 560, which is the 50-day moving average. It hasn't tested in quite some time now. So I think 560 would be the point where BPCL would stop falling. And let's talk about IOC. IOC has given a breakdown of that 50-day moving average, and IOC is looking much more weaker as compared to BPCL. So I think IOC, the actual accumulation zone would be around 140 levels. And let's talk about Hindustan. So HPCL, so the ideal buying zone for HPCL will be in the range of 425 to 430. So that is also it's around its 100-day moving average. So I think that would be an ideal buying zone for all these three stocks.
Point. Queries, and in fact we've got quite a few that have already come to us on WhatsApp. I'd encourage you, if you are just tuning in, to check out that number on your screen and send us a question. We've got the first question coming in from Ravi Kumar, and it's a question on Nelco. He's bought, I think, if I'm not mistaken, no, or rather he's asking, since it has fallen from the highs, should he look at buying at this current juncture? It's currently trading at 705, and if we pull up the chart, perhaps we'll get a perspective of how much it has fallen from the top. But Ayush, on the technicals, would you suggest a fresh entry right now?
So if we talk about Nevco here, it is currently trading at around 705, and it has fallen from almost 885 levels. It is actually at the support zone currently. 705 is the support zone for Nelco. I think some positions can be added at this current level by keeping a strict stop loss of 680. And the targets we are looking here is approximately 785.
All right, got it. Next up, we have a question from Chandra, and they're talking about the counter Schaefer India. They've bought the stock at 3,085 levels. This is slightly elevated if you compare it to the current price. That's somewhere around 2,900 rupees. 2,900 rupees, yes. Vinit, from a one-year perspective, would you suggest staying into the stock?
Yes, definitely. So, it's a industrial consumable, and we think that the manufacturing sector is on a tear, and these consumable stocks should definitely benefit from the trend that is playing out. So, it would be very interesting to keep holding on to this stock.
Fair point. I'm going to take the next one from, okay, Chandra is already done. We're taking the Girija's question. She's talking about HSCL. She's holding 50 stocks or 50 shares at 59 rupees. Shall she continue to hold or sell is the question. The stock is currently trading at significantly higher than her buy price at 310. I do not know when she bought this stock. Ayush, on the charts, how does it look?
Well, it's a trade-to-trade script, and from quite some time we are seeing a selling pressure in this stock. So I would recommend to book your profits and exit from this stock and look for a better opportunity in different stocks.
So let's extend that just a bit. If you are assuming that she sells today, what kind of stock should she look at in this market, both for the short, medium-term strategy?
If you ask me, in chemical space, then Sudarshan Chemical is looking good at current levels. It has formed a base of approximately 545 levels, and it has been trading higher since then. And 575 is the new breakout zone. So I think Sudarshan Chem can be bought for a target of 625 in the short term, and for the long term also it can be kept for a target of 700 to 750 as well.
All right, got it. Next up, we have a question on Azad Engineering. This one's from Shri Kishore Sharma from Bihar. And they say they already have bought into the stock and have bought at the levels of 524. It's doubled from there. Now, from a 3-year perspective, Vinit, would you suggest holding on to it or maybe take some profit off the table?
See, it's a new listing, and it has given very handsome returns to the investor. So I would suggest booking part profit and carry the remaining quantity, so that he can benefit from the free shares that he gets, sort of, because it's almost doubled, right? So I believe that Azad has a good track record of performance, and it will definitely do well, but it's always good to take profits.
Okay. Satya has got this next question and asking about Bata India and whether or not it should be accumulated for the next 1 to 2 years. Vinit, what do you make of this? Because we haven't really spoken about footwear stocks in the recent past. Should Bata be bought?
If you're looking to buy into footwear, I think Bata is one of the best stocks there. It's not done too much over the last couple of years. But definitely, if you are looking for an exposure into the footwear stocks, Bata is definitely the top pick out here.
What does one bear in mind then? Not necessarily going into the earnings numbers and all of that, but what metrics should one watch on an ongoing basis if we're talking about Bata and buying it at this point?
So I think you should just track the revenue growth and the margins, and these would be the important metrics to track at the current levels.
Next up, we have a question from John Joshua from Chennai. Now, Ayush, let's take a technical check on Hindustan Unilever. Now, would you suggest, since there's some pressure in the stock building in, would you suggest accumulating at this juncture?
We are seeing quite some profit booking from higher levels of approximately 2,700, and the stock is trading at 2,320. Well, the charts are not yet positive and the stock is in the lower band of the lower channel. So actually the ideal zone would be around, to take a first investment into this stock will be around 2280. And if that is broken, then we can expect a further downside towards 2,200 also. And that can be the buying zone. That can be the ideal buying zone for the long term.
All right. We have to slip into a very quick break, but we've got several questions which we will take after that break, so do stay tuned.
Welcome back. You're watching Ask Profit. And the next question that we're going to talk about is from John. This one's on Reliance that he bought at 2,900 rupees and TCS that he bought at 3,975 levels, Ayush. Now, would you suggest holding on to this from a shorter term perspective? What are the charts showing on both of these counters?
I feel Reliance should be holded because it's taking the support of its 50-day moving average, which is around 28, 50, 55 levels, and it is currently trading near that only. So I think we should definitely hold Reliance. The stop loss we have to maintain here is 2,800. If we talk about TCS, so TCS is looking good at current levels, can be holded, and I feel the target coming here is 43.40 in the short term. And the stop loss we have to maintain here in TCS is 4,150.
Fair point. I want to add to that list, and we're talking about HDFC Bank next, and Sujay from Kolkata has got this question. So just in the span of the last 3 minutes, we've spoken about 25, or will be speaking about 25% of the Nifty 50. Vinit, this question is for you. Sujay from Kolkata is asking about HDFC Bank. 1,450 is his buy price. So, more or less where the stock is currently traded, not at the low point of the recent times. He's looking at just the next 6 months, but I'm specifically taking this question to you because a lot of people are talking about how this is a great value buy looking at the legacy of the bank. But the question remains about how it's going to turn around its fundamentals.
So, I believe that this is a trial period for HDFC Bank. This quarter particularly, what the numbers they reflect. Because they have guided towards focus.
I think we've just about lost the feed on from Vinit, but I will take the same question to Ayush. Vinit was talking about the challenges. Okay, Vinit, if you're back, you were making a point on the challenges that they're faced with on the bottom line.
So the challenge is on retaining profitability, and if they're able to manage to do that, and the growth slows down. So somewhere the market will give it a little bit of respite, because then from the next quarter onwards, once the growth has stabilized, their liability franchise has picked up, it is expected that then the growth story will pan out. But you know what, I am not very positive on holding on to this stock for some time. You're not losing much money. So, it's better to exit this stock and get in at lower levels, or look at some other better franchises like ICICI Bank, which have got a sure short case of growth going ahead.
All right, got it. Next up, we have a question from Amit, and we're talking about Nestle and Astral. Now, Astral, apologies for that. Now, this is for the shorter term, from 3 to 6 months perspective only, Ayush. Would you suggest buying into these two stocks at this juncture from a point of view that you're going to sell off or will be able to sell off at a profit in the next 6 months itself?
Let's talk about Nestle first. Nestle charts are very positive. We have initiated a buy call on Nestle and we have recommended to our clients as well. So we feel Nestle is definitely good and can definitely be bought at current levels. And the first target we are looking here is 28.50, which is approximately 250 rupees from here. And let's talk about the other stock, Astral. So Astral, we have seen some profit booking from the higher levels. I would not recommend buying at current levels because the breakout of this stock will come at 2050, which is its previous base. So once it crosses above 2050, then the position can be added for Astral. And the first target we are looking here is 2150.
Okay. All right. The next counter is that we're looking at is Zomato, and Mohit from Ludhiana is asking this question. He's bought at levels of 112, and he's looking at a time horizon of for the next 3 years or thereabouts. Vinit, lots been said about the prospects for companies like Zomato, but the QSR space not doing particularly well. Of course, this is related to food, but not really in the service of making the food. Would you say that you can hold on for the long term? What are the prospects according to you?
No, I think it's an excellent pick, and one of my personal top picks. I quite like this stock. And I believe that this stock over the next 3 years can deliver some fantastic gains to the shareholder. The reasoning is very simple, is that, the delivery business is like a proverbial 1 in a million who can get it right. Zomato is one of them. And with the franchise setup and using the same to build onto the dark store space through Blinkit. I think they've achieved remarkable success there. Even we were doubtful if it would turn around quite quickly, but they've managed to do that. So I believe that from here, the going is extremely good for Zomato, and one should just hold on to the shares.
Right, got it. Next up, we have a question from Karthik from Chennai. This one's on the counter Adani Enterprises. Now, he's already bought into the stock at 3,200 levels. Now, this is from a shorter term perspective. Ayush, would you suggest holding on to it? He's currently at a loss, or should he exit at this juncture?
Well, I would recommend to hold it for some time now. The stop loss for this stock is placed at 3025. 3025 is a very important zone for this stock. If that is broken, then stocks should be exited. Although there's a trendline breakout on the daily chart, since the markets are not performing well, I think that's the reason the stock is under pressure. So I think he will be able to exit from the stock with a profit, but the stop loss should be maintained here.
All right, standard disclaimer that's on your screen that NDTV is a subsidiary of AMG Media Network, which is a part of Adani Group. But thank you so much, Vinit and Ayush, for joining in and for answering so many questions for us. And viewers, thanks for tuning in. If you are not able to take your questions today, we'll definitely try and take them on Monday. But stay tuned, lots more coming up on NDTV Profit.